Hello everybody, welcome back to another episode of The Lunch Hour, brought to you by Constant Collab, where we eat, sleep, and breathe finance, news, and everything in between. So if you like finance, news, or crypto, make sure to subscribe. There is a lot going on in the news today, so like always, let's dive in. So we are going to start by looking at the overall crypto market like we do every single day. So right now, the overall crypto market has ticked up slightly. We are currently sitting at right above $2 trillion, almost 2.1 trillion. The overall volume remains below 100 billion, currently sitting at 93.1, almost 93.2 billion dollars. Bitcoin dominance remains below the 40% mark, right now at 39.8. While Ethereum also remains below 20%, currently sitting at 19.3%. Although, I mean, we do have some positive news right now. Right now, the market is sitting at right below 4%. We did tick up to almost 6.5%. We have retraced slightly since then. I mean, that's expected to happen. Right now, Bitcoin is sitting at 43,602. Up 2% for the 24-hour period. Ethereum right now is sitting at 3,300, up almost 5%. Binance Coin almost 5%. So right now, overall, the market is pretty green. I will tell you guys why in just 1 second. But as you guys can see, everything is pretty much green right now. Shiba Inu is up almost 15%. That one is definitely moving up. But yeah, overall, the market is pretty green, which obviously is a good thing. Fear and Greed Index. The Fear and Greed Index is still sitting at 22. That is out of 100 for those that don't know. We are still in extreme fear. So I don't know if this is just a dead cat bounce and we're going to continue the downtrend. But let me see right here. I wanted to bring this up. The Fed has no choice to talk like a hawk after the CPI shows prices in the U.S. rising at their fastest rate in almost 40 years, with inflation up 7% year on year in December. So I think that is actually one of the reasons as to why the market is green. The December inflation numbers just came out. And I think they were actually 7.1%. And I think that's why, the market is looking the way that it is. But let's dive right into the news right now. So, the Ripple and SEC case, apparently due to COVID complications, is getting pushed, at least the discovery phase of it, the expert discovery. It's getting pushed an entire month, according to what I read from January 18th. I think it was supposed to end. Now it's being pushed to February 28th. And this is due to the fact that so both parties actually filed a request to the court stating that they would like for the case to get pushed. And since both parties wanted that, the judge granted it. As you can read right here, it is hereby ordered that the close of expert discovery reflected in the court's October 20th, 2021 and December 13th, 2021 orders is extended to February 28th, 2022. So expert discovery is getting pushed. That's pretty upsetting, at least to me. I mean, I just like everybody else, I would like for this thing to be over. But it is what it is. I mean, there's really not much that we can do about it. So we're just pushing along. A lot of people in the XRP community, they're watching this case very closely, especially if they haven't sold their asset. So only time will tell. I mean, we'll just have to wait till February 28th. A lot of speculation came out this morning. People were saying that this is probably due because the two parties are trying to work out a settlement. And so they're going to take this extra month to try to work it out. That way, it doesn't have to go to the court. It doesn't have to go down to the court's decision So, I mean, it would be beneficial for the SEC to come up with a settlement, because if they end up losing the case, it could be bad for them and their enforcement actions that they've been taking on other cryptocurrency projects. So we'll just have to wait. Hopefully they do come up with a settlement within this next month. But moving right along, Bitcoin price taps 44,000 as inflation comes in at 7% for December. The BTC price is rallying today following quite a few days in the red. At the time of writing, Bitcoin sits at 44,000, up 6% in the 24-hour period. Like I said, it actually has retraced from there. It's currently sitting at 43.6, up 2% for the 24-hour period. At this time of writing, Bitcoin sits at, okay, I just read that. Just a few hours ago, the U.S. Bureau of Labor Statistics released the inflation numbers for the past month. The Consumer Price Index (CPI), which is a measure of the average change over time in the prices that are paid by consumers for a basket of consumer goods and services, clocked in at 7%, up 0.2% from November. Interestingly enough, this number is up 5.5% in the past year alone, and it is currently sitting at its highest point in decades. We're talking about in almost 40 years. As you guys saw, John Nigerian, he's a huge guy in the stock market. He's usually on CNBC talking about stocks. He's a big futures trader. But yeah, I mean, the Fed has no choice but to be hawkish with inflation numbers at this point. And I wouldn't be surprised if in their meeting this month, they come out and say that they're going to increase rates even faster than expected. Right now, the first rate hike is supposed to take place in March. Honestly, wouldn't be surprised if they push it to February. So we'll have to see this month with their meeting. But yeah, on the other hand, if they do push up rates earlier, that could be bad for crypto and Bitcoin. So we're between a rock and a hard place right now. So yeah, obviously inflation is good to bring up the Bitcoin price. However, that will probably push the Fed to act quickly, which deserves a yep. I agree 100%. But with that being said, let's move on. The IMF finally admits Bitcoin has evolved into an integral part of the digital asset revolution. About time. Come on, IMF. They've been taking forever. But with that being said, they do see some negatives when it comes to cryptocurrency. After years of downplaying the effects of Bitcoin and cryptocurrencies, the International Monetary Fund concedes that the asset class is no longer on the fringes. However, it warns of several potential pitfalls that could plague the wider market. Our analysis suggests that crypto assets are no longer on the fringe of the financial system, the IMF said. Given their relatively high volatility and valuations, their increased co-movement could soon pose risk to financial stability, especially in countries with widespread crypto adoption. And this statement right here about countries with widespread crypto adoption, just like anybody else, just like an individual, how they try to manage risks. Countries should do the same thing. And I mean, if you're a nation and you're not managing your risk and you're going all in on crypto and Bitcoin, that's not very smart. And so I would think that a government and a nation, they would have smarter people making better decisions than an individual. I don't recommend anybody being 100% on any asset or any digital asset for that matter. And so if a country is 100% in crypto, then or 90 or 80, 90%, like, come on, better decisions should be made. But let's continue. The IMF notes that before the pandemic, Bitcoin and Ethereum moved independently from the stock market and showed little to no correlation. However, after the response to the central bank crisis in 2020, stocks and cryptocurrencies now appear to move in sync. Well, bottom line is that during the COVID pandemic, the Federal Reserve and federal banks around the globe, they had to bring their rates pretty much down to zero. So that money had to flow to the stock market or cryptocurrencies, and that's why they move in tandem. I think that once federal banks and the Federal Reserve increase rates, then the stock market and the cryptocurrency market will start to decouple from one another. So I don't think that that's a very good analysis, in my opinion, from the IMF, but they pretend to know everything. So let's move it right along. On other news, international regulators named crypto investment as biggest threat for investors in 2022. North American Security Administrators Association, comprising of regulators from the US, Canada, and Mexico, have identified cryptocurrency investment as the most significant investors threat in 2022. In a blog post, NASA stated that although the cryptocurrency sector has resulted in millionaires, the industry is prone to scammers taking advantage of individuals seeking to join the space. That is true. I mean, that's 100% true. I do not disagree with the statement. However, as an educated individual, you should be able to do your own research and make sure that you're not putting money into a scam. There's just no other way to say that. If you're diving into projects because of somebody mentioned it on YouTube or you read it on Twitter, honestly, that's not very smart. And you should be making a smarter decision. But they, on a quote, by far, NASA's securities regulators revealed that investments related to cryptocurrencies and digital assets is our top investor threat. Stories of crypto millionaires attracted some investors to try their hand at investing in cryptocurrencies or crypto-related investments this year. And with them, many stories of those who bet big and lost big began appearing. And they will continue to appear in 2022. Again, I'm 100% in agreement with that statement. And with that being said, I'm going to jump to this article right here. So Kim Kardashian, Floyd Mayweather in hot water after promoting alleged pump and dump scam. Again, people should be doing their own research. If you have celebrities advertising a crypto and you're just diving in because somebody mentioned it, you know what? I'm going to be blunt. You deserve to be scammed. Like, there's no other way, shape, or form to put that. But this article is talking about Ethereum Max. And honestly, I think I mentioned it in one of my very first episodes that this just looked like a scam. So Ethereum, the celebrities and the promoters of Ethereum Max are now being sued for misleading investors by making false or misleading statements about the company and its tokens, which ended up with the promoters of the token making a tremendous amount of money while investors made nothing. And that's usually what happened with pump and dump. Some people get in early, they make money while the investors and the regular individuals, they get scammed. But Kim Kardashian and Floyd Mayweather, I think this might be the second or third time that Floyd Mayweather gets sued because of a crypto scam. But Ethereum Max was first noticed in early 2021 when it went up on a significant bullish run, which was largely driven by celebrity endorsements from the likes of Kim Kardashian, Floyd Mayweather, and basketball star Paul Pierce. All three were paid significant amounts to promote the dodgy cryptocurrency. A class action lawsuit was filed against the coin's creators and celebrities who endorsed it. The lawsuit claimed that this activity was part of a pump and dump scheme. The suit states that Mayweather and Pierce promoted the Ethereum Max token all through May of last year. This led to the token's value jumping a significantly whopping 632%. To be precise, Kardashian started promoting the coin in June, just a day before the coin's value fell through the floor. Again, people, do your own research. It doesn't take that long to make sure that a project that you are endorsing is legit. You start by going to CoinMarketCap. Try to find the social media for the crypto. See how many people are following it. They're legit people. Not only bots, because nowadays it's super easy to buy bots, especially on Twitter, and make it seem like a project is legit. Go to the crypto's website. see the people that are developing or working on the project. Then after that, go on to LinkedIn, see if you find profiles for those people working on those projects. You know, you have to do some, do a little deep dive, go down the rabbit hole. Again, it's your money, and if you're willing to lose it, then hey, that's your prerogative. But it doesn't take that long, an hour or two, to make sure that a project that you're putting money in, at least it's legit, and there are people working on it. But with that being said, let's move on. Major Italian bank backtracks on crypto ban. Milan headquartered banking group UniCredit, which boasts 811 billion euros in total asset, has denied prohibiting its customers from trading cryptocurrencies, according to a statement issued on Wednesday. The banking behemoth says that there has been a misunderstanding. Italian crypto Twitter got riled up against UniCredit last week after it clarified that it had banned customers from dealing with cryptocurrency issuers and exchanges in response to customers who claimed that the bank had threatened to close his account for transferring funds to crypto trading platforms. Disgruntled customers now assume that the bank is trying to save face by backtracking on its cryptocurrency ban. So, yeah, I mean, that happened all over the U.S. back in 2017. You know, banks like Bank of America, Capital One, Wells Fargo, they were keeping people from buying cryptocurrency. And now it doesn't happen as much. Sometimes, you know, you do have to contact your bank because fraud alerts like triggers when you're trying to buy crypto on overseas exchanges. But right now, everything is pretty good. And I mean, apparently people in Italy weren't very happy with UniCredit when this happens. I don't know much about the UniCredit. Obviously, I'm not in Italy. But yeah, apparently people went to Twitter and the bank backtracked it. Moving right along. So Hong Kong to set a plan for cryptocurrency regulation by July of 2022. According to a recent coverage by Bloomberg, Hong Kong Central Bank will approach the cryptocurrency industry from three aspects: protection for local investors, comprehensive rules for authorized institutions on how to deal with digital assets, and special attention for stablecoins. Stablecoins are, you know, being targeted from all angles in the U.S. and around the globe, and obviously Hong Kong is taking an approach. It's also targeting stablecoins. The Hong Kong Monetary Authority is willing to put stablecoins under enhanced scrutiny. In a recent press release, the institution said such assets present possible risks regarding monetary and financial stability. The central bank noted it had been closely monitoring development of these digital assets and would like to be proactively share its views with the broader society. Mr. Eddie Yu, chief executive of HKMA, revealed that the bank is waiting for feedback from stakeholders on the recent proposals. He added that it will draw up a risk-based, pragmatic, and agile regulatory regime for the cryptocurrency industry. You know, I like that they're taking feedback from stakeholders. They're taking their time when it comes to these regulations. I honestly think that that's the right way to go about it. But in my opinion, you know, regulation is a good thing when it comes to the cryptocurrency market, as long as it doesn't hinder innovation. They have to work right along each other, and one thing should not overpower the other, in my opinion. And, you know, Hong Kong seems to be doing that. The U.S. is definitely taking their time when it comes to crypto regulation, and I hope that by this year, Congress puts something out. And then, this is the last article for the day. NFT Marketplace Looksrare surpasses Opensea in 24-hour sales with $385 million in volume. I've never used Looksrare. I use Opensea most of the time. But there is a new Ethereum-based NFT marketplace called Looksrare, and during the last day, it surpassed Opensea in 24-hour volume. Of course, Opensea is still the largest NFT marketplace in terms of all-time volume, with $14.5 billion in total sales. The NFT marketplace Looksrare is new and hasn't processed billions of dollars in sales quite yet. But yeah, I thought that was cool. You know, competition when it comes to NFT marketplaces. I still don't love buying NFTs on the Ethereum network. Gas fees are still extremely high. I don't want to pay $1,000 in gas fees to buy a $200 NFT. Just doesn't make sense to me. But with that being said, we are doing a giveaway on Twitter. We are giving away 10,000 XRP. Once we reach 10,000 followers, all you have to do is follow Constant Collab, retweet that tweet, and tag 3 people. So let's get it going, guys. We're just trying to, you know, get our social media going, and Twitter is one of those. So make sure to follow if you want to, you know, be part of that 10,000 XRP giveaway. As soon as we reach 10,000 followers, we'll be giving it out. Thank you guys for tuning in. We appreciate every single person that tunes into our show. Make sure to subscribe, follow, and share this video. Like I said, we are trying to get the news out there. And with that being said, we'll catch you guys on the next one.